Something. Okay, the recording just started in progress. Welcome, everybody. I'm Dennis Roman. I represent Roman's Numbers, my firm, and my bylines are Windows on Wall Street and Sales with an Edge. And today's session is going to be all around using Wall Street techniques in order to figure out ways to find companies to go after. And if you find them and catch them, what should you say to them? So it's a little bit of the dog chasing the car. If the dog actually got the car, what would he do with it once he chased it down, if you get my drift? Um, and hopefully pretty interactive. So don't be shy and don't worry about interrupting me. I'm from New York, which is a euphemism to mean I can't be insulted, right? I'm from New York and there's no way to insult me. So we'll be talking about some things like money today. And my favorite theme is the money has to go somewhere. I know I'm going to say some things that people go, do you want me to say that to somebody, Dennis? And the answer is yes. And I want you to say it because the money has to go somewhere. And if we figure that out and own it, you'll find it to be hopefully a very interesting outcome when you're talking to prospects and customers. Any questions so far? I know it's early on. Anybody have any questions that they wanted to raise though? Okay. There'll be a test at the end. So don't skip an opportunity. So anyhow, uh, just so you know, I'm not going to go through my bio. I have enough experience, maybe to be dangerous, but certainly, hopefully, enough to be effective. I got some real champion companies that I've had the great honor to work for, including HP and Oracle and TCS across many years. And you can see my tenure as a CMO is like 6.5 when the average is only 3.3. And so I know a lot. Now, none of that really has anything to do with today. I only put that up so you knew who I was. But what I really wanted to talk to you today is about my avocation. And my avocation is studying the stock market. I love the stock market. I worked on Wall Street. I worked at a broker dealer, not any of these, but I worked at a broker dealer and I fell in love with analyzing stock. And if I could come back in the next life, I'd probably come back as an equity analyst. Anyway, that doesn't mean I'm a professional equity analyst. It's just in my own life, I invest in stocks. And in order to do that, I had to learn how to invest in stocks. And so some years ago, it occurred to me that I might be able to use this information to help salespeople figure out not how to buy stock, to maybe figure out what kind of companies or which specific companies to go after. And as I mentioned earlier, if you go after them, what are you going to say to them once you get an audience with them? And so I've basically compiled an entire uh, program of education and execution that helps sales teams do exactly that and marketing teams. I keep stressing the marketing side because even if the salespeople are quite successful, somebody's got to be creating the content and collateral and the websites and all of that in a language that supports hopefully what the salespeople are saying. Anyway, that's kind of the punchline. Okay. Anytime anybody has a question, just speak up. Don't worry about it. Okay. So here's not a silly question, but here's a question. Who sees these as bumps? And who sees these as depressions? Are they rising up or are they going inward?
Do you
Looks
mean
like bumps to me.
I got one bump. Do I mean what?
do you mean like the ability to sell and market your product? Is that your question? Like,
No, I'm saying, do you see these things on the page as a bump or is it depression? Are they going inward or are they coming outward? Are they coming towards you?
Outward. To me, it looks
Outward.
like a bump.
Yeah.
Okay, how much? So we have several bumps. Do we have any depressions in the audience? Well, somebody should just pick depressions no matter what, no?
There might be small ones down there.
Well, it's not
right.
a mixture. They're all going one way or another.
Okay.
Eric,
Then
what do
it's
you
all
think?
it's all bump.
I think they're depressions.
You think they're depressions. Okay, Chris, what do you think?
I would say they are predominantly bumps.
Okay.
and with a couple
there is-
depressions.
Okay, they're all going one way. This wasn't even a trick like that. I hadn't thought about that. Okay, this is actually a piece of artwork hanging in some doctor's office I was in the other day, and I'm constantly taking pictures and using them in my presentations. Punchline is, and it doesn't matter, they're all depressions. This is a flat piece of metal, and somebody's pushed these buggers in. They're all going in towards the wall, right? They're not coming, they're not bumps. There's no wrong answer to it, because every time I ask people this, and I've already had another webinar yesterday where I had the same conversation, half the people said bumps, half said depressions. Punchline, and we're all educated, right? All of us are highly educated people. We wouldn't even be, and all of us could look at the identical information, have diametrically opposed opinions about what we're looking at. That's all it means. And I realized it as soon as I looked at it, because when I was sitting in the doctor's office from across the room, I'm going, are those bumps? Or even being in the presence of the piece of artwork, I wasn't sure which way they were going. And it's only to demonstrate we could all look at the same stuff and have pretty different conclusions about what we're looking at. Okay. So here's another one. This should be real easy for any one of us, really smart people to answer. How do we know if the stock market is going up?
Look at the index.
You could look at an index, but so how do you know it's going up?
If the index is going up, the market is going up. I mean, not individual stocks, but the overall index is going up, whatever the number of the shares that are in
I
that
got you,
index.
Suresh. Yeah, I got that. But nothing goes up in perpetuity, right? So
Yeah.
what if it went down at 3 o'clock in the afternoon and back up at 3:30?
Yeah.
What
happens.
does it mean for the market to be going up? What's the definition for this? And I learned this a year ago, and I went, I never could have come up with that on my own. Anybody want to take a chance? And what do you think the definition is for a stock market going up? And to not waste too much time on this. And even though we're all very literate, and I'm sure all of us have bought a stock in our days, we actually can't put into words effectively what it means for the stock market to go up. And the definition is any line that's reaching higher highs, which is what Suresh was talking about, commensurate with higher lows. So if the high is higher, and even if it comes down less than it came down 3 days ago, and it powers up again, and the inverse is true. So just imagine that. As literate as we all are, I assume you've never heard that before, because it struck me like a ton of bricks. That's actually what it means for a market to go up. And of course, the reverse is, how do we know if it's going down? Okay. And that all led up to this question. Sorry. Okay, how do we know how a target company is doing and could use our help? Now, this is a loaded question, because that's what we're doing here today. But if we couldn't figure out if they were bumps or depressions, and if we can't figure out what the definition is, even though it's like artwork. Somebody says, how do you define art? And the typical answer is, I got no idea, but I know what I like. Same thing here. How do we know a target company how do we know how they're doing, which could be positive or negative? And how could we tell if they could use our help? And that's the purpose of my Windows on Wall Street workshops that I deliver with great regularity to technology sales companies. Okay, so it was a rhetorical question, but you have in your mind answers, because you're all very successful and you've been doing this stuff. I'm sure if I asked Eric to spout off 10 minutes on how he would know, he would give me 10 minutes of an answer. And that's every one of you could do that. Okay, so you have ideas about how do you know if a company is doing and if they could use our help. Okay, now I'm going to take you to, I'm having trouble with my mouse. Okay, everybody know what this is? Anyone know what this is?
Like a stone with some marks.
It's a stone.
Okay.
With some ancient words on them.
Okay. Should I conclude that none of us knows what this is? I just want to tell you, I ran a class yesterday, and every person out of 13 that's not what's important. It's the Rosetta Stone. Now, why would I be bringing this into our conversation? Let me explain. It relates to today because we have to somehow translate our normal vocabulary, point of view, tone of voice, etc., into business language that can be understood by our audiences. So we're here at the bottom. We're IT vendors, we're service providers, we're consultants, etc., and we talk in a way that we talk. And that talk has gotten us X amount of success. But every place I've ever been, when we get to the end of the year, everybody's unhappy with how much revenue was brought in. Bosses are unhappy, the salespeople are unhappy, the marketing people are unhappy. So we're not working as effectively as we could, in my humble opinion. So now, when we go approach an institution, you can't approach Amazon, right? You can't walk up to Amazon and go, hey, Amazon, you want one of these? No, you'd have to talk to an individual line of business at Amazon, which takes you to a specific title of somebody at Amazon, which takes you to actually a person's name at Amazon who's got responsibility for blah, blah, blah. No, there's people here in the middle that are managing directors of IT and the various profit centers. So there's a great group in the middle, and they're the translators for these people. And ultimately, what we want to sell to the institution generally is going to end up in front of the board of directors for approval, because that's the board of directors' job, the allocation of capital. Okay, well, day by day, the managing directors of the profit centers aren't necessarily thinking along those lines, but in order to get whatever they want accomplished at their firm, they're going to need budget, and they're generally in a position where they're going to have to go get it from somebody in the C-suite, et cetera. And so the Rosetta Stone is here as a metaphor, in my view, on how we have to approach buying audience so that we can be more effective. We want to be talking in the language of the managing directors. We want to be talking in the language of the C-suite, but all too often, many technology companies are talking, unfortunately, in the language of the technology companies as opposed to the other way around. Okay, so let's assume one of us has been assigned to a customer or prospect to go get some money this year. And here's what generally happens in a classic IT shop. What's the name of the account? What's your firm's history there? Which of your value propositions might be of interest to the account? Which of your competitors have had success? Or even better, had failed at this account? Okay, that's what happens. Any marketing department would do that. What happens in a more mature shop that's been around the block a few times? Who are the accounts competitors? And what's your history at those accounts? What I'm talking about here, obviously, indirectly, is references potentially. What's the success or failure of your competitors at those other accounts? The argument you're going to raise why you should be picked and not them. Right? And what references do you have at those other accounts? So now we're at level 2 maturity. Now we get to level 3 maturity. What happens in an advanced IT shop? And this is the kind of shop where I want people to get to quickly and then even reach escape velocity using the Windows on Wall Street workshops to even improve on this. What signals does the accounts investor website presentation contain that I could take advantage of? What PRs has the account put out? What does the account's annual report and CEO message to shareholders tell me that I could use? All right, so that's like 3rd level advancement. And you may say, there can't be more than that, can there, Dennis? And I'm going to tell you there is. Whereas all of these make great sense, and each one should be researched, I have a completely different point to suggest to front office teams to really stand out. I'm not trying to replace what's being done. I'm trying to augment, build. And for anybody who's just showing up, I just want to re-mention, we're recording this. It'll be up on my YouTube channel. You don't have to take notes or anything if you don't want to. You're certainly welcome to. Okay, what's that other point of view? What's that next level? What's the escape velocity I'm talking about? I'm having mouse problems. Okay, My byline is change your arguments and you will change your audience. I subscribe to the theory that the issue with building pipeline is one big predicate. There's way too many sellers chasing too few buyers. I don't know if anybody's going to argue with that, but I can't imagine you would. But how do I know this is true? Because the buyers never call us. We're always chasing them. If it was the other way around, I'd rescind this statement. But the sheer fact that we're doing all the chasing all the time is indicative of the fact that there's way too many of us chasing way too few of them. Oh, man, I'm going to have this problem all day. What's this problem? All right. Okay. And this is a perfect example of what I just said. Are a bunch of cars of the same relative characteristics in any given year from 8, 14, 8, 10, 12 different car manufacturers. I mean, you really got to get close to these to ever find a distinction between one and another. And all of these people are trying to sell a car to some person out there who's looking for one of these. Now, obviously, I created the slide so that it makes my point. Cars are really red and blue and orange, but certainly the concept is you can get stuff from almost any vendor, and there's 10 other vendors who have something maybe equally as good or maybe even better. But buyers having to work their way through that jungle is complicated. So why not stop first finding and putting so much emphasis on presenting the differences between you and those other 14, 13 vendors in the white cars? And why not just simply change the ladder that you're on? Like Lexus is on one ladder and Volkswagen is on a different ladder. Change the ladder you're on by changing your arguments. So when you make arguments, and generally the people I know talk to the IT side of the customer community, because that's what they're very comfortable with because they're selling technology. But the business side isn't getting access or isn't being approached in all cases the way I think they could be. So a good way to just change the paradigm is to change your arguments. And that's what CA squared's about. Change your arguments, you're going to change the audience that you're talking to. Okay, let me just stop here. Any questions, any feedback, anything at all? Remember, there's going to be a test. Okay. So here's a somewhat, I admit, but accurate, simplified match of job titles to areas of interest. Board members. This is what board members are. That's the only reason not the only, I'm sorry about being so bifurcated here. The major reason they exist is to figure out what the capital allocation should be for the company. That's why they're there. So if you're going to talk to a board member, not that any of us on this call, because all of us are pretty mature, and I'm just saying this as a ridiculous example, none of us on this call would talk to a board member about speeds and feeds. But now that you know their job is the allocation of capital, you go, okay, I get that, Dennis. And what's the CEO's job? Now, if I asked each of you, you could give me 3 paragraphs on that, or if I asked ChatGPT, it could give me 20 bullet points on it. You boil it all down, the CEO is charged with revenue growth. The COO, his charter or her charter is the operating metrics of the company. Utilization, retention, development. Now, is the COO oblivious to revenue growth? No. But that's not what the COO directly is responsible for answering the questions concerning. The CEO has got the job of revenue growth. I know I'm oversimplifying. This is close enough. It's right. Hand grenades we're talking. Now, if you get locked in an elevator with a CFO, what might you say to that person? They're worried about the capital structure, cash flow, margins, balance sheet, etc. That's what they worry about. And the CMO is concerned about the growth and brand dominance. It's a very wide term, and I use that because the CMO's job just seems to grow and grow and grow and grow and grow. But I will admit, all of them are concerned about regulatory environment, pricing trends, risk, environment, social and government. All of those things are legitimate and they're all concerned about them. But in the end of the day, if we were all getting into lifeboats, there would be the CFO lifeboat, there would be the COO lifeboat, there would be the CMO lifeboat, if you get my drift. Any feedback on those points?
Dennis, I agree
Yeah,
with
Eric.
you wholeheartedly. Back in the day when I worked for Accenture, we spent an entire week learning how to talk to all of these different folks. They sent us to a class so that we talk to them about the things that matter to them. So I agree with you wholeheartedly.
Okay. Thank you, Eric. Is any of this a revelation to anyone? I mean, I don't want to ask a question that people don't want to raise their hand because they might feel embarrassed. But if I was a year ago and somebody asked me this question, Dennis, do you know all this already? And the answer would have been no. No. I mean, I appreciate it may be self-evident, but when I use the word cash flow, it's not some abstract thing I'm talking about. Talking about cash flow. These are not adjectives. I hate adjectives. I really only like nouns and verbs. Okay, cash flow is a noun. It means something. It's defined. It's exact. It's black and white. It's cash flow. People futz around with the numbers. That don't get me wrong. It's not like I don't know that. A balance sheet is a thing. It's defined, and it's the same thing everywhere in the world because everybody doesn't do everything, but everybody uses the same generally accepted accounting principles. So I found this very illuminating when I started to think about it, that these are the things that I have to incorporate into my vocabulary. And if I said I had to do that, then I was thinking maybe other people have to do it too that are into sales. Okay. I think I made this up because this has been my real experience and it's a very uncomplicated. You can see all my slides are uncomplicated. I'm a nuts and bolts. Okay, who typically speaks about what? Okay, you got the C-suite, CEO, COO, CFO, CIO, CMO, and there's really two CROs today, right? Revenue and risk, and they're never the same person, but so there really should be two CROs. Okay, what have we accomplished? So it's the quarterly meeting, it's the annual meeting of the shareholders. CEO's job is what did we get done? It's his or her job to communicate that. And maybe the COO and CFO will get to say something about what did we get done? Now, as we shift to the next column, how did we get done what we got done? The CEO begins to relinquish the microphones to the COO and the CFO, and both of them have relatively equal voices about how they accomplished what they were going to accomplish. Okay, you might argue with an X or not here, but the real, I think, aha moment is the next column. Where are we going? That's like 95% the CEO's job. He's hardly or she's hardly even looking at the CEO or CFO to tell us. It's the CEO's job to tell us where are we going, and then how are we going to get there? CEO is still speaking, and then relatively equally, depending on his other two people, to also contribute that. That is a quarterly conference call. That's what happens in a quarterly conference call or an annual call. So, a few things to observe. The other three people in the C-suite or 4 or 5 people in the C-suite, they don't get to say anything. It's not like they're not important. I'm certainly not trying to suggest that. The shareholders look at those top 3 people as why, in fact, they should be shareholders. They're not looking at the other people. Okay? Now, I submit that the CEO's letter to shareholders is like one of those invaluable documents that begins the analysis of any public company and needs to be absorbed by the sales and marketing teams. The CEO's letter to shareholders. And why is it? They're not even saying that is the name of it. They call it the CEO letter to shareholders. Why do they say that? because shareholders care about the performance of the stock. Yes, there's diversity. Yes, there's the environment, but the shareholders who own the company, the CEO letter is written for them. Here is how we are going to make you happy next year and the year after. Now, besides that being true, when people drop into the next level, which is the compensation for the CEO and the other members in the C-suite, what's the predicate of the compensation that the CEO primarily, but it's also true for others, what's the compensation going to be based on? Almost the entire compensation for CEOs is on reward. It's not their weekly paycheck, it's on reward. And what are you rewarded on as if you're in the driver's seat? The stock price went up, the earnings per share went up. And hence, the letter to shareholders, it's like the CEO's talking to the people who's going to give him a bonus next year. He's saying, here's what I'm going to do for you to make you happy. And then when I make you happy, you're going to pay me a boodle of money. So the first two places I start on any company that I'm going to go after is with the CEO's letter to shareholders. I recognize in the annual report how these individuals are being compensated, and I begin to build my plan. The CEO letter to shareholders has a whole lot of adjectives. I throw the adjectives away. It has nouns and verbs, and I grab those and I use those repeatedly as guideposts and North Stars, regardless of who I'm talking to into that organization. Okay, any thoughts about this?
Does it have any numbers to back up all those thoughts and claims that CEO is making for the next 2 years in that letter?
I need you to rephrase that.
Yeah, does it have any numbers, like the claims that are based on these numbers, right? Can you hear me?
No, I can hear you fine. These X's are based on my observation of hundreds of conference calls of public companies giving quarterly meetings and annual meetings to the shareholders.
Okay.
So the numbers you're talking about, I'm trying to make sure I understand. The CEO is going to talk about numbers in his letter to shareholders. They are certainly talking about numbers on what they've accomplished and how they got there. I mean, those numbers are prolific in the reports. But is that what you were asking or no?
Yeah, exactly. Like,
okay.
What are the claims based on? Like the numbers
So
should be.
you know what's hidden in your question. You might, if I left you alone for 10 minutes, you'd think of this by yourself. You know what's in that question? Go get the CEO's letter from the last 3 years and see how they compare. Right? He said something in 2019, 2020, 21. And if that company keeps changing the definitions and the goalposts and all that other stuff, you got a clown act on your hand in the C-suite. It's a clown act. But if they keep on the line, and then there's another thing, and I'm going to remember to bring it up when we get there in a few minutes. There's one other thing that you can validate what those people are saying, and I'm going to show you what that is in a minute. And if those two things are in sync, you got one solid company. You got one solid, and it's not part of today's, it's part of my much longer. There are 3 numbers, which I'm not getting into today, that either tells you the C-suite is a bunch of clowns or the C-suite is really buttoned up and knows how to run a company. And I say that with all love for corporate America, if you will, because that's all I've ever done is work in corporations like this. And I shouldn't really say clowns. It's just, if they can't manage their risk, Silicon Valley Bank is out of business. The 18th largest bank in the United States, they're out of business. They are out of business. They spend so much time. Let's not talk about how they got out of business because it's a little bit of a volatile subject. They're out of business. The 18th bank, they're out of business. Why? Management. How come all the other banks didn't go out of business? Somebody was not watching the ball, right? Okay, I love that question. And I'm going to tie it into something else in just a minute. All right, so this is all of us. I believe, I'm speaking for all of you and all salesmen in the world, right? Salesmen and saleswomen. I believe my firm's value propositions can really make a difference. And I'm sure they're right. Most vendors I ever talk to, they're bloody sincere. They mean it. They're not like shysters. They mean what they say. And for the most part, if they're not selling too far ahead of the product roadmap, their stuff is terrific. But how do I get anybody to listen to me? If I can make an embarrassing parallel right now, I think the things I'm covering today are enormously beneficial. And you are going to probably agree with that by the end of the session today. But how do I get an audience to listen to me? That's every one of our charters. Constantly, we're going, I got something to say. I got a great product to sell, but how do I get people to listen to me? It's a challenge because there's always too many buyers, too many sellers chasing too few. Okay, this is not going to come as a surprise. Accounting is the language of business. Okay, period. That's what they talk. If we're talking anything but accounting to these people, we're wasting our time. Or said the other way, if we started talking accounting to whoever we're talking to at the company, we're going to start talking to people who want to talk accounting back to us about return on investment, et cetera. Now, many technology people aren't prepared to talk about that because they haven't figured out how they're going to make those arguments. That's another place where Roman's numbers helps like crazy. Okay, so just to keep things going, I'm not going to ask you to answer this question, but there's like 5 metrics that matter. That's what all public companies are evaluated. Now, there's hundreds of numbers, but these basic 5 are what you want to be paying attention to. I'm going to give them to you in a second. They all come out of this triptych, this wonderful, crazy triptych. I didn't put this in there as an eye chart. There's an income statement, which feeds the cash flow statement, which feeds the balance sheet. And each of those 3 separate but integrated documents have literally hundreds of line items. And why Roman's numbers exist for one reason is to tell you there's only like a half a dozen on each piece of paper that even matter. Those other 150 line items, don't worry about it. And this is why people are so afraid of getting into this, because it looks overwhelming. It looks like the US tax code. Okay, the income statement, what did we earn this year? Cash flow, how liquid are we? And the balance sheet, what are we worth? And you take these 3 documents, right, and you lay them on top of each other. You take 2018, you put 2019 on top of it, 21, and you hold them up to the light and you go, what's the trend line here? Because any one of these is just a snapshot. It's like I would recommend not buying a stock unless you're looking at that stock's competitors. Why buy that stock if one of their competitors is even better than that one, right? That's the thrust of it. If you're going to sell to a company, make sure you know what that company's competitors are doing so you could use the information. And I'm going to show you that in a few minutes as well. Okay. Here's the 5 things. Revenue growth. We talked about that earlier. The CEO's bonus is predicated on this, as is the bonus of a lot of other people. The earnings per share, free cash flow, earnings before interest, and return on equity or return on total capital. Those are 5 numbers. How many of the salespeople under your tutelage know this? Well, let me start again. If you have a team that you're responsible for and they're out selling, and you said to them, could you show me the income statement for the accounts that you're calling on? And they go, when you get a silence back or a deer in the headlights, they're leaving money on the table because it's such a window into the organization. Okay. I submit the sheer volume, variety, and velocity of data is mind-numbing. There's hundreds of line items, but not all of them matter. And often, the data is conflicted. There's a lot of data floating around, a lot of it's conflicted. I could show you 2 reports on the same source on the same day, 6 minutes apart, saying real estate is collapsing, and the other one said real estate is at a boom time. I mean, 3 minutes apart, 3 people said, oh, those aren't depressions. Those are, right, those are boulders coming at you. 2 people looking at, all right. The data is complex, experts abound, but few of them are really. And so what I also have come to learn, because I'm successful now at this, few technology companies are bending this information to help them make their numbers. This is more unusual than it is usual. And I'm not talking about Arthur, Accenture or McKinsey. I'm not talking about them. I'm talking about your nuts and bolts sales guy working for a tech company or gal working for a tech company. They're not doing this. Now, the information's all in the public domain, but they're not doing it either because nobody told them, or it's too complicated, or they don't know where to get the data from. And that's why Roman's numbers exist. And if they're not doing it to go hunt for companies, they're certainly not doing it in the marketing department to go figure out what to say to the companies if they actually catch it. Okay. If you could actually pick the accounts, if your boss said to you, look, I got 100 accounts, I got 10 salespeople, throws all of the accounts, takes all of the financial statements, those 3 financial statements, throws them on the table and say, all right, you people figure out which accounts you want. You present that to me, and if I think you're making sense, I'll give you the accounts that you asked for. And then you jump into those numbers and you go, I want this one, I don't want that one, I want this one, I don't want that one. Because at the end of the year, the salespeople aren't going to have anybody to complain to that their boss gave them a bunch of turkeys. They fought for the accounts that they ended up with. Okay. And one of the things that they would want to figure out right away is how do you determine the financial health or distress of the accounts that, in fact, you might have the opportunity to go pick? Or which parts of the accounts are having the biggest issue? I'll talk about Amazon again. Nobody needs to explain what Amazon is, but not every line of business at Amazon is doing as well as every other line of business. So which line of business are doing better? That is, which lines of business are doing? That's explained in what's called a 10K document, and it lays out this line of business. It doesn't say this line of business is having trouble. What it says is this line of business's numbers are these. So look at the numbers and you figure out if they're in trouble or not, right? That's kind of the idea. And once you figure out what their issues are, what things are in your wheelhouse that you could use to help them address those things. And if you can message your wheelhouse value propositions in a way that would how about who has the nerve to say this? I'll just throw it out there. Hello, we're from Roman's numbers, and we're here to either affect your revenue or your costs or your earnings per share. Meaning, we're either going to help your revenue go up, which will make your earnings per share go up, or we're going to take your costs down, which will make your earnings per share go up. And if your earnings per share go up, your stock price is going to go up. Who has the nerve to say that? Yes, I admit anything could happen in the stock market, but you know why people buy stock? Because the earnings per share keep going up. That's not why people buy Tesla. There's always an outlier. By and large, the investing public is interested in earnings. So tell that to them. Okay. And how about if I could tell you which accounts are flat broke? I mean, accounts that are flat broke, it's right in the financial statements. Why would you go chase an account that's flat broke? Okay, being obtuse again and an extreme in my question, but if you can lay out 100 accounts and 5 of them over here are broke, just take them out of the mix. Don't even, why waste time even going into an analysis of it? Okay. And then this talks about the types of companies that you could be chasing. There's companies that are leaders in product, innovation, quality, like Apple, Johnson & Johnson, and Nike. There's ones that are into operational excellence, cost efficiencies, Dell, Southwest, Target, and customer intimacy, Harrah's, Publix, Nordstrom's. So not only you're looking for what kind of companies to call on, but those kind of companies pride themselves on these. Now, all companies want to be all things to all people. I get that. But in where the heart is beating at the center of the headquarters, this is what these kinds of companies are about. But when you boil it all down, my note at the bottom, in my opinion, you could forget everything I've already said. If you are expert in how the company you're going after is making money, profits, money, if you really understand that process of how they're making money, you'll be so much further ahead than most people are who are trying to call on the same account. With what precision do you know how they're making money? And if they're not making money, obviously you must have value propositions to help them. Okay. There's 6 characteristics that I would like to think nobody could argue with. The business is only going to be successful if their operations is top notch, if their customer relationships and their communications with their customers are top notch, and they can manage their books. You take away any one of those, they're going to not be in business. They're going to be Silicon Valley Bank. Okay. And the purpose of business is to use revenue and capital, which typically comes from shareholders, to produce customer satisfaction and reward the capital providers. What does that mean? That means stock splits, that means dividends, that means the earnings per share are going up, yada, yada, yada. So now ask your sales teams, hey, we have these 3 value propositions. How would you plug those into what you see on this page? This is that is a Rosetta Stone. Okay, here's what happens in a recession, or here's what happens. Okay, sorry. So the stock market is divided into 11 sectors. I'm sure that's not news to anybody, but those 11 sectors behave very differently depending on what's going on in the economy. Some of them roar when it's an early stage recovery. Some of them roar when it's a late stage recovery. So not only are you being asked to figure out, am I going after Target and Southwest Airlines, or am I going after Lexus, et cetera, or Apple? So it's like that. And then you figure out, well, that company is about to have hard times because of the economic cycle that's going on. So this is another prism into which to view the public marketplace. I've mentioned this already. I think this is a great graphic. The C-suite thinks Wall Street and vendors think Tech Street. We talk past each other. And by C-suite, I mean any of the middle management and managing directors of the company. And Gartner's research says that 73% of all the buyers who haven't even implemented yet are sorry they made the buying decision. Right. What more reason could you have for putting off a buying decision than to see that? Okay, so we've now covered this. So we all know what this is, right? This is an income statement. I don't know for what company, it doesn't matter. This is an income statement. And in the income statement, there's sales or revenue, there's pre-tax income or pre-tax profit, and there's net income at the bottom, which then is used to calculate earnings per share. And some people have shied away not knowing what an income statement is, so I made up this slide. Basically, sales or revenues, expenses, pre-tax income at 20% is a world-class company. And then there's income tax. Now, how do we relate that to our own lives? Sales or revenue is our weekly paycheck. Our expenses are mortgages and food. Pre-tax income is our take-home before taxes. Then there's taxes, and then there's net take-home pay. That is an income statement for you and for me and for any corporation. And knowing theirs will increase yours. So I make up what are called, when I'm hired to, I make up what are called numbers and narratives reports. And they extend the information that the accounts have in order to do what I think they can do if they have the information. I'll give you an example. Here's data. This is just data. Everybody recognizes the data. This is data. Doesn't mean anything. We don't know whether this is the distance between Miami and New York, or whether it's the weight of frogs in Australia. It's just data. There's no context. Nobody would pay anything for this. Now, if we make the data a little bit more meaningful, that the data is going to relate to 4 publicly traded banks in the United States, and that the data is all current within the last few months, and that the color red is worrisome. Okay? So we're making the data now information. I haven't told you what the 4 banks are, but now I've told you it's 4 banks, and I've told you what the categories are. Return on equity, return on average assets, loan loss reserves, which tells you pretty much it's a bank. So now you know something, and you know what else you know? The red numbers means these 4 banks all have a problem with return on equity. But they don't all have a problem with with return on average assets. And you now know kind of where the breakpoints are. So if one guy has a 0.9 in red and the other guy has a 1.1 in black, you already know where the breakpoint is, where it's no longer considered risky. Okay, but this is now information. But now I want to move this to intelligence. Now we can get it up to the intelligence level. Now we have, again, I've blacked out the banks because I'm not telling anybody that because we're just on an open webinar here and I don't want to be okay, but now you see the notes on the right side. It tells you an enormous amount of information without telling you who the bank is that's going through this difficulty or through this expansion or whatever. So now you've got intelligence. And who wouldn't want to know more? And that's what I call super intelligence, but that's when I would give you the actual names of the banks, if you will. You know, so and so my numbers and narratives reports show that there's a good bank, a better bank, a best bank, and a wow bank. Okay. I've taken out, as I said, the bank names to protect the innocent here, but the idea is if your house hires me to do this, which I call my numbers and narratives reports, what you get back is a complete analysis of the financials of the institution you're calling on as it may relate to your company. And I also, at a certain level, compare them to their nearest competitors. So now if you can imagine, you go over to the WOW Bank and you say to them, you know, my company is doing business with 2 other banks and their numbers are killing you. You can see how this would empower your sales team. Okay, now we're going to pretty soon get near the end here. So you have a client, you have a target client out there. They have an installed legacy vendor. Somebody's installed there, somebody that you want to replace. And maybe they put out an RFP. They may not. But if they put out an RFP and all of a sudden they're faced with literally dozens of apples and different apples to consider. And at some point, they could filter that down to just the filtered apples on the left. And you manage to somehow marvelously, succeed in reaching that point. And here you are. And what do we do next, right? What do we do next in order to take advantage of this? So I submit, among other things, the equity analysts in the world, forget Gartner and Celent and Forrester, not that they're not wonderful. I'm not saying that. You want to continuously be using their intelligence. But my point is the equity analysts can be some of your best friends, whether you know them or not, isn't the point. Look at this piece of equity analysis document. This is called a value line. It's 2018, so it's old as heck. And it was about E-Trade. And it actually says, and this is the way these documents are now coming out regularly, they're telling E-Trade what they should be doing regarding technology. Hey, E-Trade, you should be doing this. So when your sales team goes over to E-Trade, you could say, it's not just me. And as a matter of fact, if I could take that one step further, when you go to E-Trade or you go to anybody, my recommendation is the first thing you're really starting to tell them is, we spent weeks figuring out who we were going to call on. Your name just didn't come out of a hat. And we've studied you for weeks. And we've decided you're somebody we could really help. And this is the kind of stuff we've been learning about when we started to study you. And a company that you're going to call on is going to be flattered by this, believe me. And they're going to think you're a vendor of a special caliber because you're using these kind of techniques to make an impression on them. Okay, that's kind of the session for today. A good almost 55 minutes. I want to thank you for participating today. I know, I've had a very good time. I don't know if there's any questions now that you may still have.
Yeah, Dennis. So I'm Shubhadeep from Seattle, and to give a little bit of my background. So I've been a software developer in various capacity for about like 22 years, and 2 months back, I quit my full-time job. I would say a good paying full-time job to start our own, like a startup in Seattle. Like it's a tech-based startup. Like we have one IP. We have a patent that we just got recently, and we are pretty hopeful pretty confident with our product abilities. Now, we got almost an MVP ready. In probably a couple of months, we'll be having an MVP ready for our product. And we can target both B2B and B2C. So what I am trying to gain expertise on is that something that I've never done is marketing and sales, right? Where do I start? What do I do? I basically, I open my eyes in the morning. First thing I look at, what is it I'm supposed to do? What's the best route, right? So something that maybe you can spend a couple of minutes talking about it.
So if, I'm certainly keen to talk to you, but we could do that on another call.
Okay.
Later this week or next week, that'd be fine. I'd love to talk to you about this. I'd be
Okay.
glad to, actually. And as a matter of fact, here's a guy who actually knows, not as much as I do, more. Eric, you want to talk directly to Subbu about what he's asking us?
Well, I had this conversation. I'm one of the mentors for the accelerator program for Techstars. So I had the same conversation with one of the teams, and similar conversation on Thursday with one of the other teams. There's 20 teams, 1,200 companies applied for the program, 20 got accepted. And as founders, you make a fundamental error. You start with a product and then say, who can I shove it to? Stop laughing, Dennis. It's not funny, right? Where you really need to look at what's the market need, who are the potential buyers, what's the product they will accept. That is your minimum viable product. And then after you get a pilot customer to then proceed to a minimal marketable product, if that makes sense at all, right? You need to rethink, right? What's the need? What am I trying to solve? What's the problem I'm trying to solve? Just because you developed a cool product doesn't mean there's a market for it or there's a product market fit. Does that make sense to you?
Yeah. If I can put it in my words, the way I understood it is like, do you start with the market study with the idea, like get a market sense as to where and if there is a fit or if there is a need to start with, and then develop the stages of the product? Is that what you're trying to say?
Yes and no.
Okay.
What I'm trying to say is you can't start with an idea. I've been working with a guy that worked for me years ago, and he is a genius. He burns more brain cells in a day than I'll have in a lifetime. However, he gets all excited about building a product. And he's been building this product for 4 years and still doesn't have a customer. Because he never thought, what problems am I trying to solve? What's the market need? So you have a product idea, but what's that product trying to solve, right? And then you may have to pivot and say, I got to put a wrench on this corner of the product because it's a little off. But if you're not addressing a market need, and I'm being very careful dancing on this, right? Because you never knew you needed a minivan until Chrysler made one and told you needed one. You never knew you needed a smartphone until Apple launched a smartphone.
Sure.
So you can create a market need, right? But that is the hard way to go, and you have to have a lot more behind you than you have as a startup. As a startup, you need to address a market need. Dennis, what are your thoughts?
I love the examples you gave. I always use the Steve Jobs ones too. Steve, it's been folklore that Steve never asked anybody really about. He never did a focus group on a smartphone. He never said, "What do you want?" he could see this thing, but there's 1 in a million. He was 1 in a million. That's not the way the world works. There's not all this aha stuff. So there's two kinds of conditions. One, you're either going to represent something that already exists, and there's no problem with that. It's a great place to start, but you may not know how to communicate that best to the market. Let me give you an example. So let's assume a company that you're looking at is having trouble on the revenue side, and your company sells a digital customer front end. Now, everybody who goes and represents that kind of a product from different vendors will say to the company, we have a digital front end. Your customers are going to love it. Okay. And that's where they stop talking. We have a digital front end. Your customers are going to love it. I submit that's wrong. We have a digital front end. Your customers are going to love it. If your customers love it, they're going to buy more stuff. If customers love it, they're going to tell their buddies to buy your stuff because they love it. And if customers love it, they're not going to leave your institution, and you're not going to have to replace them with new customers. So if all of that's true, that means your revenue is going to go up. Oh, how do you know my revenue? Because if they're happy customers, how could it not go up? I just explained that. And if your revenues go up, your stock price is going to. How do you know my stock price is going to go up? Because if your revenue goes up and you don't spend money ridiculously, your earnings are going to go up. Now, no vendor says those last three things. They all stop and say, your customers are going to be happy. Great. They don't care if the customers are happy. They want revenue. And all you got to do is finish the sentence. If they're happy to buy more stuff, that means your revenue is going to go up. If your revenues go up, your earnings are going to go up. If your earnings go up, your stock price is going to go up. Okay, that's if you're going to represent something that already exists, because all the stuff that exists is never defined that way. It's like they get as far as they can in the paragraph, and then they stop talking, when in point of fact, it's the second part of the paragraph that has data in it that the buyer is going to be mostly interested in. The other extreme is find a need and fill it. And God bless you to do that, because that's complicated.
Yeah.
You know, that's like finding a website name that's not already taken. All right, go find one of those, right? I mean, they exist, you know, maybe Hitler.com isn't being used by anybody, but, you know, they're hard to find. And I don't know how many Steve Jobs there are running around that are inventing stuff that nobody's ever heard of before. Anyhow, that's my quick answer. Okay, we're over an hour. Shamu, I hope you enjoyed today.
Oh yeah, for sure.
Good. So don't be a stranger. You can reach Eric. You can reach me. We're both up there on LinkedIn. And if you want to talk, we'll be glad to.
So Dennis, so the other person's name, sorry, I just missed it out. What's your name? The other person's name,
Dennis.
Sorry.
Yeah. So my email is, well, I'm on LinkedIn, Dennis Roman, not Rodman, Dennis Roman. I'm on LinkedIn, and my email is dennis@romansnumbers.com.
Perfect. Thank you.
All right, Eric,
Eric, can you can I get your contact or add you on the LinkedIn?
I'm Eric Ciano on LinkedIn, and my phone number and my email is right there.
Perfect.
So
Thank you.
Look up Eric Ciano. It's a lot easier.
Thank you.
There's also a link there, so you can schedule time on my calendar.
I appreciate it. Thank you, guys.
Right in the contact information on my LinkedIn profile.
Thank you. Thank you very much for your time. Thank you.
Thanks, guys. Thank you. Bye-bye.
Bye-bye.
Bye.